Good day, traders. Before we get started, I'd really appreciate all the emails and questions that I've received, and I apologize if I haven't gotten back to everybody, but I'm doing my best to do that. If you could take a second and hit the like button for me, it'd be greatly appreciated. If you haven't subscribed, subscribe. I try to update 2-3 times a week with relevant information that will help improve your trading in real time. So again, thank you very much. Let's get started. Hey, thanks for all the emails and questions regarding the live webinar. For those that have asked, I'll provide the link below for the replay. It's a fantastic night. Obviously, Wednesday, it's been a consolidated, fairly tight week on Wednesday for a lot of the pairs. And excellent feedback from a lot of people. And again, just tried my best to answer all the questions. But that link is available below. And again, thank you. Today, just looking at some possible first red day setups. You haven't heard me talk about this before much, but this is something that a lot of stock traders will talk about. And first red day pattern. First red day pattern trading relies on using overhead resistance as a risk level. So essentially, it's a close that closes below the previous day's close. And so, for example, you may have 1 or 2, 3 days up, bull candles, and then a candle that closes below a previous day's close. So we talk about day 1, day 2, day 3, possible red day setup. That could be where traders that have bought at that last level, on the last level going up, would now be potentially underwater or negative equity as the next day has closed beneath the level of buying volume that has been trapped up high. Sometimes these buyers will choose to hold the stock or currency or whatever instrument that is until they can break even or get out with a small loss. So we'll look at a couple possible setup examples today. And again, you can Google this, take a look at your charts, or just do this for observation purposes into Friday trading. So let's take a look at the charts. The other day we talked about this on the webinar, day 1, day 2, day 3, the 3-bar push up against the strong move down on the pound on the daily chart. And I mentioned that traders who may have bought the close on Monday were buying up high, whereas our low is down low. They're forcing traders to buy up high if they're trading the longer time frames. We had day 1, day 2, day 3. I talked about possibly the market triggering shorts before pulling back and then possibly retesting or falling through that. Now, when we take a look at the 15-minute, we had the MPC meeting last night on the news. We talked about, I'll just type this in here, Monday, day 1. Monday, day 1, we had the squeeze at the low of Friday's close. We had that smaller pattern within a pattern at the bottom of the range. Day 1, day 2, almost an inside bar until the close of the session. And then day 3, we worked the high. And then yesterday, heading into the MPC meeting, we had 3 pushes into that middle peak for a 33 style of 3 peaks into the day 3. Then Thursday, we had the news take out the lows of Wednesday's low. And again, so we had a close that closed below the previous day's close, and we talk about the volume that's bought on that last level, and even into the close of Tuesday, potentially now is caught up top, and the market has just briefly traded up into that area in Asia. And again, if we take a look at that smaller pattern within a pattern from Wednesday that we talked about, the small rectangle at the bottom of the Asian session. So now we have possible volume trapped up high. This market, if it is a first red day setup, we could possibly see this market roll over to possibly retest the lows of Tuesday. We know there are stops down there, and of course yesterday's low. Again, it all depends on how price behaves, but we did have a first red day setup. We had a close below the previous day's close. We have volume trapped on that last level of buying. Now, if the market was to break above here and continue to trade back up towards where the announcement level came from, obviously that would negate that. But if this market was to roll over, we possibly could be retesting these lows, and of course the larger target would be the low of the week. Now, again, it all depends on how price behaves, but we're talking about the first red day setup. Now, the euro is a little bit different, but again, we had day 1, day 2, day 3 inside bar, a bear close candle, but closing with a higher high and a higher low. And then yesterday, Thursday, an inside bar, and again, we'll take a look at that. This potentially this inside bar can give us a bit of insight into how the market may be setting up today. Now, similar to the pound, we had day 1, we had the small compression at the bottom of the Friday, Monday trading in Asia for the day 1, day 2, day 3, and then yesterday inside bar. We talked about this with the 3 peaks before dropping down and going into consolidation. Now this morning in Asia, they've gone back up briefly into that U.S. session peak formation underneath a 50. Obviously, if the market was to break back through there, taking out yesterday's U.S. session high, that would trigger, obviously, inside bar traders long, and would negate this this setup in terms of a possible rollover. But we do have volume trapped underneath on this upper level of buying. So again, similar to the pound, although the close was not beneath, we did have an inside bar. We do have a peak formation with 3 peaks in a 33 style setup. We have volume trapped underneath, where obviously there are stops below this upper level. And again, we do have stops below Tuesday's lows. So at this stage, I would be sitting and waiting. I would watch. I would not trade this until we saw some sort of price action. This may be setting up, if it was to auction down through into this level, it possibly would be a U.S. session trade. Again, looking at the pound as opposed to the pound, where we've already broken beneath. We have our first red day close. We've auctioned back up into that lower volume. And if the market was to come off 39.25 and head towards double zeros, again, similar, this market could work its way down, pull back, and be a U.S. session trade for a short if it was to set up appropriately. If the market was to break through and retest where that move originated prior to the news yesterday, obviously it would negate that whole scenario. Looking at gold, we talked about the peak formation consolidation. We'll just highlight this again. We've had stop hunts in the U.S. session each day this week, putting in 3 peaks. So we had peak formation on Friday, peak formation on Friday night, peak formation high and peak formation low, and then the volume has been contained inside of that Friday's high-low for the entire week. We went up on Monday as an inside bar. We put a peak formation in for first push, second push on Wednesday, and then last night into the U.S. session on Thursday, we have a third peak formation. Now, similar, if we take a look back, we've gone up into Asia, and again, we've got volume trapped. If we just slide this back across, gold sometimes will be infamous for big pushes down into the U.S. session heading into a Friday. Not to say, again, this could be a bear trap down low. We do have peak formations on both sides. If this market was to trade lower and then reverse, taking out the double zeros, obviously it would negate that. But again, 3 peaks after a massive down move. Inside bar traders are still caught long from Monday. If they traded the break, we have stops below Monday, obviously, and then all below that 17,750 area. So if that support was to hold and the market rebounded, obviously that would change that scenario. But again, this could be a U.S. session trade setup if that market rolls over accordingly and price behaves as to heading into that direction. And we talked about Bitcoin as well, the peak formation on Tuesday, Monday, Tuesday, day 1, day 2, peak formation, day 3, trading on top before briefly retesting in Asia that breakout of that peak formation and pulling back above Tuesday's high on Bitcoin. So again, possibly resuming its upward projection. But again, just as we've traded lower in Asia, how we head into that. This rising structure or channel seems to be holding intact. We haven't retested the high of the week yet, which is Monday's high. It could be squeezing into that peak formation. Obviously, if we break that rising trend line, they could be breakout, pullback, retest, and roll over. The other scenario on Bitcoin that we're talking about, the first red day, Bitcoin, similar with the peak formation, would have exhibited a possible first green day after a large move down. So again, you'll see that volume, anybody who sold Monday's London session and into Tuesday, they briefly came back in on Thursday in the Asian session, stop hunting breakout traders from the Asian session on Wednesday. But they came down into this 32,550 region, and again, some traders possibly may have been able to get out of that trade if they were caught in the wrong direction, if they're short or they're holding on to that. But anybody who sold below that area would still be caught or stopped out with a loss. Again, the first red day, the thesis is that the market closes below the previous day's close. First green day would be a market that closes above the previous day's close. So this is obviously some sort of pin bar on a daily. But the market did break that high, continue, retested on breakout traders, and is held above that. So again, Monday's high may possibly still be a target of the high of the week, depending on how that price action handles carrying into that point. Doesn't matter what market I look at, I would still apply my same principles. This is the S&P. Obviously, if I was trading the S&P, I would probably mainly only focus in the U.S. session, as I'm sure that on most normal days, the bulk of the volume that comes in is in that U.S. session time frame. But we had a trending all-in day yesterday, and again, timings, not round numbers, highs and lows of the day. The market blew off into Wednesday's close before grinding its way back up through Asia, back above the double zeros, finding support at that 42,400 level into the Europe-London window before trading higher, breaking through the double zeros again, heading into the U.S. session with, again, consolidating on top of the double zeros. We're at the bottom of a double zero box, but one push, two push, 1, 2, 3 reversal, heading into the equities hour for a 100-point move. And again, this is on a 15-minute chart. So traders who are looking at this on a 5-minute or looking just purely at the support generated at the double zeros at 42,500, good day for a 100-point move on the S&P. So timings, round numbers, are key. Engulfments, pin hammers is a great example of a trending day or an all-in day. You wouldn't want to counter-trend this. Obviously, you counter-trend, you can get smashed. But it doesn't matter what market. Keep it simple, traders. Come to the screen in the timing window. If you're trading outside of the timing window, obviously, there can be opportunities. It depends on where we're at in the week, in that weekly cycle and in that daily cycle. And coming back and just looking at gold, again, a peak formation exhibited in the gap time. That gave us a thesis heading into this session, obviously, that they had locked in the low or potentially locked in the low. We had the consolidation and then the stop hunt back through the high of the day, consolidation and continuation in the gap time. So again, an example of where there's movement in the gap time. But if you come to the screen, for example, New York traders potentially are just waking up when this is all happening. They come to the screen. They may now be looking at this as a sell setup heading into the U.S. session as a stop hunt on traders that have chased this move up to the high. So again, taking profits, locking in money, and making sure that you're taking something off the table because nobody gets a free lunch. Every time a new session opens, they're going to go back possibly either that session or the next session to get traders who are in the money. And again, just an example of that, traders who chase the move into the close or shorted it into the session at the beginning of Asia. There's a 50 pip stop hunt heading up. May possibly have a peak formation in place. And again, we talked about, depending on how price behaves in that Europe-London window, we may have an opportunity, If it bounces, then obviously this may be a Monday trade setup for a narrow range consolidation for possibly a move higher. But we have a lot of volume caught up high, and we had a massive move down. We could have an Asia-London high-low and a possible U.S. session stop hunt. So keep it simple, traders. Possible first red day setup on a couple of the pairs. Again, depending on how price behaves. Heading into the session opens, the equity hours are key. Keep it simple. Keep your screen time to a minimum and just focus on the high probability opportunities when the market has the juice generating for an explosive move. Have a great weekend. End the week on a strong note. Have a great weekend.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.